Hello and welcome to this guide on underwriting income protection produced by the IPTF as part of Income Protection Awareness Week. My name's Andrew Wibberley. I am co-chair of the IPTF, but my background in insurance, in life insurance, is all around underwriting. So my first job almost 20 years ago was in underwriting for a reinsurer. I worked at a direct insurer as we launched into the UK market and then was back at reinsurers before being a consultant for the last 5 or 6 years and working with a number of different insurers around their underwriting and products propositions. But for this small, hopefully reasonably simple video, I want to try and distill kind of that 20 years of information into 20 minutes. I do apologise if I go off on tangents, if bits get a little bit complicated, but I'm really going to try and keep it at hopefully an appropriate level for people, for advisors who are maybe just coming back to income protection or just starting on the income protection journey and have questions about underwriting. So in this short video, I want to talk about what underwriting is and why we do it. I want to talk about why it's important. And then go through the different outcomes that happen through underwriting, as well as the process of underwriting itself. So the questions we ask, why we ask them, the sorts of subjects covered, and what happens at the end of that process. Give some explanation as to why different insurers will do different things, and hopefully not say too often through the video that different insurers will do different things. So we'll come to that at the end. And then last but not least, talk about where you can go for more information, both on individual cases or decisions or clients, and also more generally. So first of all then, what is underwriting? Underwriting is not just the sales prevention unit. I would strongly argue it's actually much more positive than that. So underwriting really exists to give certainty about claims, to make sure that the insurer understands what risks they're taking well enough that they know that they will be there to pay claims when they happen. If an underwriting department's doing their job badly or not at all, then you can imagine the number of claims that get stored up, more than the premiums taken, and obviously imagine the consequences of that in the most extreme situations. So underwriting needs to happen so that the pricing is appropriate for the clients, for the risks being taken. And that's why we need to do it, it's why it's really important. And it is a difference between individual income protection and other products, other similar products, which might rely more on pre-existing conditions exclusions. So the advantage, in my opinion, of underwriting is that it very explicitly tells you what you are covered for and what you are not. Maybe if we just go through some of the areas that are talked about, then that will help bring that to life. First of all though, I just want to sort of run through the different outcomes that come out of the underwriting process. So you'll start the underwriting process typically with a price in mind, with a premium in mind, which you may have got based on the applicant's age and smoker status. Going through the underwriting application, you'll get asked a series of questions on medical risks, on occupation, on hobbies, on travel, and potentially on the financial situation that your client is in. And at the end, we'll go through each of those in detail in a second. But at the end of the underwriting process, you'll get a decision, and clearly the most important decision is whether the insurer chooses to offer any terms at all, offer any cover at all. So do they accept or decline the risk? If they do accept the risk, they might accept the risk at standard terms, so the best terms available in essence for that age client, or they might charge an extra premium on the risk. Now that extra premium on the risk could be for any of those factors mentioned, so medical, occupation, hobbies, etc. And again, we'll come back to that. As well as the possibility of a higher premium being charged, insurers may also change the coverage, change the cover that they are offering. So from a medical perspective, that might be to put on a specific exclusion based upon your client's medical history. And for other reasons, for hobbies, the same kind of principle applies. The insurer may also, so they may charge extra risk, they may put on an exclusion. They may also change the definition of any claim under the policy, such that they, rather than offering terms on an own occupation basis, they'd change the terms so that it would only pay out if somebody was unable to do their own or any occupation for which they're suited. Or in extreme situations, they may change the cover so it only pays on a task-based basis. Those decisions and those terms will vary by insurer. There, I've said it once, but it is a critical point in understanding and in comparing the offers you get potentially from different insurers to make absolutely sure you're comparing like for like. You may also have insurers and decisions back that only offer terms for certain deferred periods or for certain products. So in simple terms, for reasons you can probably imagine, more generous terms may be available as the deferred period, so the period at which the claim is paid, gets longer. So what's acceptable for a policy that doesn't pay until a year off sick may be broader than what's available for a policy that pays on the first day if you're off sick. So yeah, that will again come through in all areas. So those are the principal outcomes: accept, decline, rate, exclude, postpone in there as well, obviously similar to a decline, but with a clear point at which it makes sense to come back and review. Then looking at the different risk factors and how they're taken into the equation. For income protection, unlike other benefits like life and critical illness, I think it makes sense that we start by talking about occupation. And occupation probably is the main differentiator between many different insurers' offerings here. Really important you get your head around it and understand it from day one. So some insurers will have different occupation classes that apply. So almost the traditional way that many mainstream insurers would approach things is to put occupations into 4 classes: occupation class 1, 2, 3 and 4, as you might guess. For, I guess, occupation class 1 being skilled professionals who rarely leave an office, 2 maybe professionals who get out and about, 3 skilled manual and 4 unskilled manual. Slightly loose, slightly rough labels, but you probably get the idea of where they're headed. And the premiums for each of those increases. So roughly speaking, and it would differ by insurer, roughly speaking, if you're looking at a £10 a month premium for occupation class 1, you'd be looking for about a £15 monthly premium for class 2, £20 for class 3, and up to a £30 for a class 4 occupation. So that's how many insurers still base their occupation ratings. However, there will be many products out there, in particular traditionally from maybe more of the mutual insurers, that don't have that occupation class going in and put everyone into the same pool. Pretty obviously, you can imagine price-wise where those compare well and where they don't compare so well. But again, really important that you get a full and accurate understanding of what that occupation title is, what their occupation duties are, equally importantly, and that you enter that appropriately. As we go into the medical side of things then, I guess my reminder of the responsibilities and jobs of what everyone has to do in this process maybe comes to the fore. So I would always say it's the insurer's job to design the questions, to ask the right questions, to put those questions down on paper. It's the advisor's job to actually ask exactly what questions have been written, have been designed, and it's the client's job to answer those questions honestly, as accurately as they can answer them. If all of that happens, not only does the customer get an accurate decision, but way more importantly, the claim is much more likely to be paid. If any of that doesn't happen, so if an advisor takes shortcuts or changes the wording of the question, or if the customer doesn't answer them accurately and honestly, then obviously that does bring into play the risk of claims not being paid due to misrepresentation. And that's so important, right, because that is where the product pays, And it's so important because those different question wordings will directly impact on the price and the understanding the insurer has of the product. So ask the questions that have been designed. If you don't like them, if you don't understand them, if the customer doesn't like them and understand them, tell the insurer. It's in the insurer's interests that those questions are readable, are well understood, etc. So if you find yourself having to constantly paraphrase or apologise for a question or reorder the questions, or you would like to do that for a better flow, then I can guarantee every insurer would be very, very grateful to have that feedback. Moving on then, I guess specifically in a bit more detail to those medical questions. Certainly if you come from outside protection insurance, maybe as a more generalist IFA, a wealth advisor, etc., there's no hiding the fact that we get pretty intimate, we get pretty detailed in those medical questions we ask. They shouldn't be memory test questions, they should be appropriate questions that are reasonable, and as I say, that's where those honest answers become ever more apparent. Depending on the insurer you apply to, there may be the opportunity for questions for decisions to be made on a straight through process, so where an instant decision is given after all the application questions are answered, or it may go to every case may go to an underwriter to review. Either way, within the medical questions in particular, a number of applications, a number of clients will require further medical evidence to fairly assess the risk. Where that happens, that evidence may be sought from the client's GP, or the client may be asked to go for medical tests expressly so that decision can be made. Obviously, insurers don't want to do that unless they need to do it, so that would typically only happen if it's either for a very large benefit amount, or if the disclosures, if the information is unclear or is for a particularly, I guess, worrying condition where the terms are unclear. So it's certainly the minority of cases, but I guess everyone in the process recognises that once that happens, things slow down a bit. However, insurers do commit to that, will chase, and the good news there is that with more evidence being obtained electronically, we are now seeing average times for things like GPRs really come down from around 6 weeks to around 2 weeks. So the processes are really speeding up for that minority of cases where further information is required. As I've said, once that medical information comes, once all the medical information that's required is obtained, whether directly from the client or from extra medical evidence, one of those decisions mentioned before will be made. So accept or decline, exclude or rate, and so on. So a couple of other significant factors to talk about, I think, are probably hobbies and travel. So again, the underwriter will be looking at the risks in those instances that an individual presents. I think hobbies in particular is one of those subjects where different insurers will take different approaches. And ultimately, one of your jobs, roles, chances to impress as an advisor, in my opinion here, is to understand those different approaches that are taken. Every insurer's approach will be dictated by a combination of things. So if they use a reinsurer, if they insure some of their risks to the reinsurer, much of their approach will be guided by the reinsurer's manual based on global research and applied into the UK lives. So to take something like hobbies as an example, they'd be looking at, for example, the risk of global accidents for pilots flying a different number of hours in different size aircraft and the like. And that will all be brought to bear on your individual client. The questions will dictate that answer. Again, for some mutual insurers, actually their experience will be, their decisions will be much more based on their own insurance experience, and potentially different approaches will be taken as a result. And certainly for some of the hobbies, you'll see some companies accepting at standard rates, some rating, some excluding. Again, similarly with travel, I think travel is probably the main area where You can expect ratings to change for pretty obvious reasons to different territories, to different countries as political situations change. So that's certainly something which hopefully people will find enjoyable and an opportunity almost to discuss with insurers as they see those things changing. Last but not least on the underwriting side of things is financial underwriting. Now, for almost all insurers now, there are different products for which financial underwriting is largely done at different points almost in the process. There may be some element of guaranteed payout, but there'll also be some rules that apply, and they may differ depending on whether you're employed or self-employed, limited company director, taking dividends, etc. I think it's really important, both on your behalf and the insurer's behalf, that we don't start a policy with someone who is overinsured. So, where there aren't guarantees or where you're above those guarantees, it is really important that information is shared appropriately with the insurer so that they can make sure that you and ultimately your client aren't disappointed at claim stage when ratios of income, etc., are taken into account. I think then that's my initial run through of the key different areas of income protection underwriting, why it matters, and how you can understand more about it. As I've alluded to, as I've gone along, different terms are available from different insurers. And different terms are also available for those different payout benefits, as I've said. So if you're ever struggling to get insurance for an individual, it's always worth looking at longer deferred periods. It's always worth asking different insurers. And you can now increasingly do that through technology. So the likes of Underwrite Me and iPipeline have offerings which begin to help you to understand where some of those differences may lie. There's also often pre-sales inquiry lines into different insurers, to different underwriting companies who can talk through a specific case. And as I say, I think I can't labour the point enough that for income protection there is more difference. There's more difference in approach, and in my opinion, rightly so. If you look at what the risks of somebody not being able to work, there clearly are a number of extra factors that sit behind that, or their ability to be able to work more positively. A number of extra factors that sit behind that over and above, say, the chances of someone dying or having a critical illness. So someone's motivation, someone's resilience, that kind of thing, ought to be part of the picture and part of the consideration. So that's this brief video almost over. I think for more information, I would encourage you to speak with your representatives at different insurers, to use those pre-sales lines and use the underwriting guides that are available. I hope that you found this helpful, and if you do have any feedback on this, we'd be very happy and keen to do similar future guides on specific areas discussed here, or where you think more information would be helpful. For now though, thank you, and happy IP applications. Thank you.